Ladies and gentlemen, we just came from the conversation with Jerome Powell saying that they are going to cut by 25 basis points today, with another expected 25 basis points cut in October and then another one in December, meaning that we are going to see 3 rate cuts here just by 2025 by the end of the year. Now, the reason I bring this up is because SoFi's own guidance has highlighted that they are only assuming about 1 to 2 basis points worth of cuts, okay, or 25 basis point cuts or 50 basis points, okay. That's what they mean by rate cuts is in chunks of 25 basis points. They also assume GDP expansion of 1 to 2%, which right now I think it's in the line of about 1.6%, so they're right in line there, and then a normalization of unemployment in the 5% range. Currently, that's projected to be 4.6% for 2025. So all of these assumptions are actually very conservative. If they actually come in above expectations, 3 rate cuts and potentially even less unemployment than what we're expecting, that means that SoFi can move faster than what we've seen previously. They can take out a little bit more risk if they know that unemployment's not going to be as high as what they're assuming. And that means that they can also sell more loans to other institutional buyers if there is more rate cut demand going forward. So, of course, we end up seeing a 25 basis point cut today. And that's exciting because institutions have not only most likely front run that decision by going to SoFi and saying, hey, we would love to buy more of your loans before that rate cut decision, but also with the commentary from the Fed of an additional 50 basis points worth of cuts, which was not expected, okay, that was even more dovish than what we were expecting, then that means that there's going to be even more phone calls today over to SoFi and saying, hey, we have even more capital demand in capital markets to buy their personal loans, to buy their home loans or student loans, because obviously more rate cuts is going to lower the cost of funding and then lower usually the coupon rate that they're charging for those loans. So existing loans actually increase on their gain on sale margin. Without all that jargon, essentially SoFi is going to make more for their existing loan book. And going forward, it also means that they're going to save costs if those rate cuts do come through. So we've explored a lot of amazing data in Q3 so far, but I got to tell you guys, with this new news, this is by far the most bullish I've been on SoFi. This is truly a real headwind territory that we are in, meaning that SoFi is not fighting against all of these macro economic problems. They're actually getting boosted by them, okay? And we end up, let's go through some of these. So first off, we're end up seeing in July and August, which are the data that we've seen for website traffic. For SoFi, it's been the 2 record-breaking highest amount of visits that we've seen for SoFi, okay? So already, before we even see September, we're seeing record numbers here. Then that also goes into, if we were to average that out for September, would be by far a record-setting amount of traffic that is going to SoFi just on their website, not even including their app, okay, which is, where most people are actually visiting SoFi. Then, if we end up taking a look at their Google trends, you can also see here that a lot of activity just searching up SoFi has actually been increasing. So you can see the break is right around here. This is June 30th, where it ended of last quarter of Q2, and then everything going forward is Q3. Now, we haven't finished out this quarter, and looking on this chart, it looks so spread out that, maybe it's higher. Yes, the peak is here, but maybe the averages are lower. I've got a better way of visualizing it for you guys, and not just for the term SoFi, but for many terms. SoFi Invest, SoFi Credit Cards, SoFi Loans, everything. Well, whenever you start to look at it this way, what you end up seeing, we can actually end up pulling this data out of Google Trends, divided by the amount of quarters. So taking the dates that correlate with Q4 of 2024, Q1 of 2025, and so on, what we end up seeing is that this chart is showing that there's a massive increase in Q3 of 2025. Let me just increase that for you guys so you can see the whole chart here. This is an unbelievable increase, okay? Massive increases just from Q2 on the amount of people that are looking up what SoFi is offering. So SoFi, SoFi Bank, SoFi Invest, SoFi Loans, SoFi Checking, SoFi Credit Card. It's unbelievable. I misspelt it here, so I apologize, but it's actually just a misspelling there. It wasn't a misspelling in the actual Google Trends. But there's even more. Okay, so not only do we have that data, but SoFi stock itself is still primed to see even more upside. And where we really find this is in their short interest. As of the end of August, August 29th, and we are set to see what September 15th is going to be like. And I assume that it'll be lower in the amount of shares that are being sold short, but how much lower? We've seen, a few million each time end up going down, maybe even at the, very bullish sign that we only see, 80 million sold short. Well, we're still at 8.5% of total short interest that is being sold short on SoFi. If the stock continues to go up, those people who are shorting, just through the nature of shorting a stock, that they have to borrow those shares from other investors, pay them a premium for borrowing those shares, and then have to buy them back to return those shares at, a later date of their choosing. So if they are continuing to pay the premium, that premium could definitely go up as the stock continues to climb. Or if they end up having to close out those shorts and pay back and, call it a loss at these new, very high prices for SoFi, that means that there's even more buying demand for SoFi that's being forced by the institutions that wanted to bet against us. Meaning that all of these people that have risked their, clients' money to bet against those companies are going to have to start to pay us through buying back the stock and appreciating the stock price. And maybe we've even seen a little bit of that already. But yeah, SoFi stock, once again, holding above $27 per share today due to the fact that we got rate cuts. This is going to accelerate their demand in their products, lower the cost of funding, improve margins, and sell those loans to the loan platform business and other capital markets activity like just wholesale worth of loans. So unbelievably excited about this. This is exactly what SoFi wanted to see and more due to their own assumptions, okay? Meaning that guidance is going to raise after Q3 for Q4. And then that also means that we are, probably going to see a record level of new customers based on the amount of demand that we're seeing on Google Trends and website traffic. So unbelievably bullish. Even at $27, this is making me feel so primed that we're going to end up seeing higher prices by end of year, by 4 or 12 months out from now. Pick your timeline. I'm excited. Thank you guys so much for this quick update or joining me all the way to the end. Make sure you guys hit the subscribe button if you haven't already. If you want to see more of these updates, catch me live. I do a live stream every single day. Bye for now.